Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
From past few episodes, we've been decoding the 1% TDS on crypto and its impact on the consumers, you. But what about exchanges? What do they feel about it? What has been the impact on the Indian exchanges is what we'll try to understand today in this episode of Coffee and Crypto. I'm Arun Singh, a very warm welcome. But first, we'll have the big stories of the week. Starting with the good news, the crypto market has been looking green from the past few days. And as per data on CoinMarketCap, Bitcoin rose 12.68% in the last 7 days, showing a jump of 5.48% in the last 24 hours. The world's biggest and best known cryptocurrency is up 23.9% from the year's low of $17,592 hit on June 18. And yes, we were talking about Bitcoin here. And then Ether, the coin linked to the Ethereum blockchain network, climbed 16.57% in the last 7 days. Moving ahead, crypto lending platform Celsius Network, which had halted withdrawals and all user transfers starting in June, citing extreme market conditions, is in a super gamut. A former money manager for the company said in a lawsuit that they used customer funds to manipulate the price of its proprietary token and lost hundreds of millions of dollars by failing to hedge the risk. The complaint said Celsius ran a Ponzi scheme to benefit itself through gross management of customer deposits. Moving on to the next story, crypto lender Voyager Digital on Wednesday in a statement said that they have filed for bankruptcy. This was a week after suspending withdrawals, trading and deposits to its platform as it sought additional time to explore strategic alternatives. Toronto-listed Voyager estimated that it had more than 100,000 creditors and somewhere between $1 billion and $10 billion in crypto assets. The company also recorded the same range for its liabilities. The last story now, the former head of short video social media app TikTok's gaming unit, Jason Fung, told Reuters that he's launching a blockchain gaming startup as one of the two co-founders. His exit comes as TikTok and its Chinese owner ByteDance have been aggressively expanding into the $300 billion global gaming market. 34-year-old Fung worked with TikTok for 2 years. Now, coming back to the mudda that we had of this show, considering the recent collapses of different protocols and ongoing global inflation, rate hike, and then you had rising oil prices, the trading volumes of international crypto exchanges have been affected. But here in India, we've had a new tax regime as well. How are exchanges reacting to the latest rule of 1% TDS which has come into force? We'll find out, but on our coffee wall. With me is Ashish Singhal, co-founder and CEO CoinSwitch. Hi, a very warm welcome. And of course, we were talking about how consumers have been affected by the recent 1% TDS on crypto rule. But I want to understand the opinion of an exchange as well. But before we get on to that, I want to check with you what is happening with these exchanges internationally collapsing, these protocols coming to an end. What exactly is happening?
So crypto industry has several business models. Some are inherently riskier than the others, and right execution of these business models can make or break a company. What we are seeing today is that companies who did not have the right execution or promised unsustainable high interest rates have failed to weather the storm. These platforms had to stop redemption, trading, withdrawals of the user funds because their foundation was weak.
Okay. And if I have to understand your foundation or how you function, let's say your business model, how is it different?
So CoinSwitch is built to last. Our foundation is very strong. We provide users with a simple platform to invest in crypto for a small fee. And that's all. That's our business model. We simplify crypto and provide the everyday users with a secure and trustworthy platform to make informed investment decisions. Our users can invest into crypto assets, sell their withholdings anytime. They can withdraw their funds from the CoinSwitch wallet to their registered bank account at any point in time. The entire user journey happens within the KYC-enabled ecosystem, ensuring transparency and compliance with the law of the land. Crypto is stored in a custodial wallets provided by global reputed companies, and the users fully control their investment decisions. Further, we do not offer any lending or do not reinvest users' crypto. Our success lies in offering a robust yet simplified crypto experience. Further, we emphasize on informed investment decisions. We encourage our users to do their research and equip them with educational content through our blog, YouTube channel, and more. We have also introduced, amazing features like Riskometer to alert our users before they buy coins that are considered particularly high volatile.
But Ashish, you use this word, we don't lend, and then of course we're seeing these lot of lending platforms also failing. So are you pointing out that lending is a problem? Would you say that or no?
Lending, I wouldn't say it's a problem. Like I said, that it depends on the execution of the business model. Okay. Lending as a business model is inherently a bit riskier, but the right execution is what makes or breaks the company. Since CoinSwitch is not involved in such riskier business models, the risk to our users and our company is not there.
Okay. And since we don't have a regulation here in our country, is there a way to bring some sort of self-regulation, or maybe all the exchanges of India can come together and have, let's say a code of conduct or some self-regulatory terms with which consumers can be protected and so can the exchanges be?
Definitely, and it is already happening. The crypto industry is not regulated in India, as we know. Therefore, the industry has come together through our industry body called Blockchain and Crypto Asset Council, BACC, to proactively set up self-regulatory mechanism to establish KYC norms and best practices. While we work with the authorities to effect a comprehensive regulation that would protect users and enable responsible businesses, and CoinSwitch is built to be future-proof, right? We follow KYC norms on par with, regulated traditional financial services. And the government has introduced some guidelines and frameworks on the crypto industry in the recent time, including, ASCII guidelines for advertising, including taxation. The next step would be to increase or, to introduce comprehensive regulation to standardize KYC, capital norms, and reporting mechanisms. Regulation will provide clarity and close those loopholes, while through the industry body, we are working on self-regulations and implementing a lot of these self-regulations, but ultimately, it's the government regulation which could bring this clarity to the crypto ecosystem in India.
And we recently had the new tax regime, and 1% TDS on crypto has also come into force. And we've been trying to understand how consumers will be impacted. Now, I've been keen to ask this from you. What has trading been like for an exchange like you after 1% TDS imposition?
I think the 1% TDS has certainly impacted the trading volume across the platforms in India. But the important question here is whether users are trading less frequently or if the trading has moved to the gray market. In India, a platform like CoinSwitch have put in place frameworks to comply with TDS requirement as per the rules. To enhance transparency and aid users with their annual income tax returns, CoinSwitch will provide users with the invoice with a breakup of all deductions, including TDS and fees. Taxation, we understand, is very, very necessary, but excessive taxation could disincentivize users from compliance. Since TDS locks up capital at every trade of the users, some users would try to move to the gray market or exchanges outside India's regulatory purview, right? And there is a misconception as well among the users that trading in the gray market, actually, they don't have to pay any TDS, which is not true. Failing to comply with tax requirement could attract penalties directly to the users. And on the regulatory side, India should incentivize users to stay within the KYC compliant platforms and India's regulatory purview. The purpose of the TDS is to establish a trail of transactions, and a smaller rate of TDS can also achieve that. So a user protection and tax compliance can coexist.
So maybe what you're suggesting is something lesser than 1%. And if there has been a decline, if you can share details of that as well.
Exactly. A lower withholding so that users feel comfortable using the KYC compliant exchanges and do not look out other alternatives or move toward the gray market.
In the end, what would you tell people invested in crypto at the moment? Because definitely these are not the easiest of the times. So what would you tell someone who's invested in the crypto or also is very enthusiastic about the technology?
CoinSwitch primarily caters to the retail investors, and while the market sentiments are bearish across asset classes, this won't be permanent. Markets are cyclical. Further, there are several macroeconomics factors which are causing the downturn, be it high inflation, high interest rates, geopolitical uncertainties in Europe, and the relative shock in the world economy. Once the inflation is under control, macroeconomic situation changes, the market would rebound. And that has happened across multiple cycles across these years. And crypto is building the new internet. Crypto is here to stay. Crypto would continue to evolve, continue to build, and be the force for the good.
Okay, on that positive note, thank you so very much for joining us and answering all our questions. And now we'll move on to our next discussion. Now, considering the tough market conditions, impact has also come on the colorful and exciting world of NFTs. And several enthusiasts want it not to be counted under the usual umbrella of currencies and assets. It's a special phenomena, is what they say. But I have some numbers here, and that's what will form base of our conversation with our experts. So see, monthly sales volume on the largest NFT marketplace, that's OpenSea, plunged to $700 million in June, and it came down from $2.6 billion in May. So just compare these two figures, $700 and then $2.6 billion. And it has been quite a far cry from January's peak of nearly $5 billion. Now moving ahead to the next fact, which is according to nonfungible.com, by late June, the average NFT sales sunk to $412 from $1,754 at the end of April. They track sales on Ethereum and on blockchains. Hence, we come to our second discussion, which is, has the NFT bubble bursted, or is it going in the right direction and probably just bearing the impact of the overall disturbed market climate? We'll get answers to this from the industry experts. We have Sandrina Paula, VP International Partnerships, Guardian Link. We also have Ajit Khurana, founder of Flexical. A very warm welcome to both of you. My first question to Ms. Paula here, if you can decode what's really happening in the NFT market. You are a pioneer in this field already. And of course, you know, these figures are not very encouraging for someone who's thrilled about NFTs. What exactly is happening?
Oh, okay. Thank you for having me, Kevin. First of all, I want to address that, you know, any asset class for that matter, having, you know, they all have its recurring ups and downs, and NFT as well, you know, it's just another asset class. But once the NFT has matured, let's say with utilities, we can say that it should have less volatility, you know. And I would like to address it right from the root cause behind all of this, because we are in a very unique period in history. Let's, you know, if I want to highlight some being the geopolitical issues with Ukraine impacting oil, wheat, and, you know, the social mind state of the entire world. And as well as there's global inflation issues, there's huge, you know, interest rate hikes. And all of this, apparently, in some way or the other, it has impacted earnings. And hence, you know, the stock has impacted in global markets. Now, you know, there were several, you know, unfortunate crypto losses, like we all know about the Terra stable coin going bust, and also like crypto liquidity issues, you know, due to panic selling. And all of this has really, you know, affected the market, and NFT is no different in the market from where we're looking at right now.
Okay, so you would say that, you know, it's overall having an impact of what we are seeing with other asset classes as well. Mr. Khurana is also here. You know, we started with NFT, and especially here in our country, with everybody getting onto it via art. Do you think this decline is because of the shift maybe? Now probably investors or enthusiasts are moving from art to other variants of it. Do you think that's the reason behind the shrinkage that we're seeing?
Let's understand the shrinkage. The price going down from around 1700 to 400 on an average means that in terms of Ethereum, the price did not fall at all. Close to 80% of NFTs are denominated in ETH. 20% is for all the rest. And ETH has fallen 75%. So the price in ETH, for example, if Bored Ape was at 100 ETH, based on the price that you showed, it should have been 25 ETH, but it is close to 80 ETH. So what I'm saying is that there is a little bit of a cross-currency fluctuation issue also. But the point you made is also very valid. A lot of people, and I'm very unhappy to say this, a lot of people who were buying NFTs were not really bothering about what they are buying. Namely, it was a sort of gold rush that buy anything, it becomes more valuable. And in a market downturn such as this, the good news, if any, is that people start looking closer at what it is that they are buying. Are they buying a ticket to the movie, or is this ticket the end product, right? And there are two very different things, right? So I think that that is what has happened here.
Yeah, same question to Paula. Would you agree with Mr. Khurana here that, people were just trying to ride on the hype of it? For example, we have this example of Jack Dorsey's first tweet, which was sold as an NFT for $2.5 million. And then the person who owned it struggled to get bids of more than a few $1,000s for it. So would you agree with what Mr. Khurana is saying?
I do. I mean, everybody has their own opinions. Like, I would also like to add that, if you take a long-term view, say, if we go forward to 2024, 2025, NFT will be, a very crucial asset class, because blockchain will play a major, global technological role as everyone is slowly adapting to blockchain, including government officials. And crypto will re-emerge as a powerful, network of assets. And yes, so will stock markets, so will real estate and consumer goods. Now, this era of Web3 just added something new. Like, we all have heard about Web 1.0, which added internet, 2.0 added the social media, and all of which, have gone through downturns. And then if you notice, all of these industries came back stronger, 1.0 crash back in 2000. Amazon stock was $3, and today it is $1 trillion company. So if we look back in 10 years and feel the same way of this industry, even more dominant than we can actually imagine, because the world of blockchain in itself is no less than an ocean. It's a space with enormous meta possibilities. And we've seen both the boom of crypto. It's uncertain, and there's loss in it, there's growth, but surely the dip in the crypto recent months, it's really impacting the space as well. But I'm sure that it's going to go back up, addressing to my first root cause. Yeah.
Ms. Paula, since you operate in this world of NFT, I hear from so many of market experts when they say games are the next big thing in NFTs. But then, we see the biggest NFT-based game, which is Axie Infinity, has also seen its in-game token collapse to less than half a cent, I think. Would you say that games are the next big thing in NFT?
I would add to it, because one thing that connects gaming is, of course, a utility, which is an NFT in itself. In fact, we in Jump.Trade are also launching the world's biggest play-to-earn game, which is a cricket-based NFT. And we're launching it next week, this month itself. And anything that has utility always attracts, an NFT. Axie and NFT was successful because it had utilities to it. And no NFT, I would be very blunt and honest and say that, you cannot just go on and drop an NFT. You need to have a meaning behind it. You need to build that community. You need to know what's the purpose of that NFT. And only then will your NFT project succeed. We have a lot of NFT projects. Not everyone is, not everyone has their success. And yes, it's very critical. It's very important. And we could see this in the gaming industry, which is booming, and it is here to stay in the gaming world.
Okay, so you're quite excited, of course, and standing with it. In the end, also, to just wrap it up, I would also want to talk about the regulation part of it, Mr. Khurana. The groundbreaking new crypto regulations agreed by the European Union last week. They mostly excluded NFT, and, Spain is also seeking to clamp down on the way video games sell virtual assets for real money. Let's talk about Indian context as well. Of course, it's accounted as a VDA, virtual digital asset. Do you see or do you expect a separate sort of regulation for NFT, or these to be treated differently?
3-4 days ago, the government actually came up with an NFT specific circular in India. This is much after the VDA classification in the union budget, which said that if the NFT represents an underlying physical asset, such as real estate, then the NFT will be governed by the underlying physical assets rules, such as gold, real estate, etc. However, if the NFT's underlying value is intangible, then it will be regulated as a cryptocurrency. Well, regardless of whether I like it or not, actually, I would say that it is reasonable given India's stand. If they had actually said all NFTs are going to be treated not like crypto tokens, frankly, there would be a rush for crypto entrepreneurs wrapping their utility tokens and calling them NFTs. So actually, I think it has been a reasonable step by the government.
Okay, I have last 30 seconds, Ms. Paula. Is it a perfect time to build a collection since, the market is not performing great and some experts say probably this is the right time to build a collection? Would you say that?
Well, if you look at it, with the NFT projects just being launched in the couple last month with the crypto bear market, brands like Coca-Cola, they are releasing a Pride series of NFTs to support the, LGBTQ community. Latest celebrities, like Kevin Hart, he's launching his NFT project. He's just announced it. In fact, even with the crypto bear market, Cristiano Ronaldo has just announced his partnership with Binance as well. So you could see that there's a lot of the industry from every vertical space. You name brands, you name fashion, you name celebrities, you name athletes. Everyone is hopping into this things. Even automobiles industry, like Bentley just announced the launch into the market. So it's pretty much so to say, it depends on the project, because you look at it at a long-term perspective and how to build it. And they may announce it at this bear market, but the supporters of each of these projects, let's say I'm a fashion supporter, I would support that brand and I would get their NFTs, because for me, it holds an emotional connect.
So it's more about building communities is what you are essentially saying. But thank you, both of you, for joining us for this conversation. Now we'll quickly take a break. But after the break, we have MCQ, that's My Crypto Queries, where one of our viewers, Ubaid, is asking, can crypto tackle inflation? That's quite an interesting question. And to answer that, we'll be having Rohas Nagpal for MCQ. Don't go anywhere. Keep watching Coffee and Crypto. You're watching Coffee and Crypto, and now we have MCQ for you, which is My Crypto Queries, where our expert answers your queries. We have with us Rohas Nagpal, author of the Crypto Playbook, Chief Blockchain Architect, Hi-Fi. A very warm welcome. Ubaid's question is, can crypto reduce or enhance inflation? That's quite an interesting one, and I would love you to answer this.
Sure. So first step, we should understand what inflation means. Inflation from an Indian perspective is the fall in the value of the rupee. So for example, when I was in college, for 100 rupees, I could get a tank full of petrol for my motorbike. Now, if I had kept that 100 rupee note in a drawer and today I took it out, I wouldn't even get 1 liter. So what has happened? The value of the rupee has fallen as compared to the value of petrol. So now cryptos don't directly affect inflation in any way. They were considered to be a hedge against inflation. What does it mean? That if inflation is 10%, any asset which gives me returns more than 10% is considered a hedge to protect my money from reducing its value because of inflation. But when we look at what's happening right now with Bitcoin crashing 60 and 70%, obviously we can say crypto is not a hedge against inflation. And there are many other assets which are considered that: stocks, real estate, gold and silver. So many people use different things to hedge against the inflation.
Okay. And then we have Ajay's question as well, and it's quite a cryptic one, I must say. It says, if Bitcoin is lost on international trading platforms, will government ask for details? And how I can decode this is probably Ajay is asking if government can track it for him, or will government get to know about it?
Sure. So sometimes I feel this is very unfair way of thinking. First time people don't want government to regulate, but when something goes wrong and their crypto is stolen, now everybody wants government to find it for them. So I think that's a very unfair way of thinking. But yes, a lot of people are falling to scams. And in many cases, the scams are finally being traced back to international exchanges. And in that scenario, you can still report the case to the Indian police. So even though you did not want your crypto regulated, when you have lost real money, it is a case of cheating. And yes, you can go to the police. They can try to track it down, and there are many methods under which even foreign exchanges are actually giving the crypto back after, of course, the case has been proven in a court of law or the police have given sufficient details. So yes, the government can track it down for you.
Sure. Thank you so very much, Rohas, for answering these questions. With this, we've come to an end of this show, but we'll be back next Friday at 6:30 p.m. I'm Arun saying it's goodbye from my side. Keep watching NDTV 24/7.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.